Welcome to MegaTrade 101 video presentation and market view analysis in the foreign exchange market. Today is the 11th of July 2011. What we have here is the US dollar index on a daily basis, and since it's a live market that we're covering right now, the dollar index is at 76.29, continued to move higher simply because of the contagion crisis in the European, especially with Italy coming in the limelight. However, in spite of that particular data on unemployment at 9.2 last Friday's closing, it did manage to close as a blue bar with a long tail up at 75.41 level here and opened Monday in the European market at the 75.36, which is roughly around 28.28 basis points gap, and with the succeeding opening here continued higher. And as we made mention, looking at it on a bigger perspective on a weekly basis, it had penetrated the particular resistance, sorry about that, and looking at it now, opening with a gap, it is gaining momentum for increased volume and fresh positions for flight to quality investments for investors shifting their funds, and especially so from euro to the US dollar. However, what we would like to emphasize here, if you would notice the configuration of these two bars, which is similar to a piercing formation. We used to call it the spike formation, where three gradual movements moving higher with higher bottoms and penetrating the resistance prices here with an opening gap for the weekly would surely be able to have a bullish signal for the US dollar to continue higher. Now, with that said, we would also be covering the euro as well as the pound and the euro pound cross rates at this particular moment. What we have here is a weekly chart for the euro dollar cable as well as the cross rate on the euro pound. Similarly, if you would be able to recall, the inverse relationship of the euro dollar with the US dollar index could be identified here, in particular where we have made mention the three piercing formations in the candlestick bar, where it is represented here as number 1 configuration, number 2, and number 3. As far as the opening prices from last 2 weeks, it had made a pattern where making highs with lowering tops was a signal that it would be able to retrieve lower. And looking at it here, the continuation of the prices continued to move lower, working at 1.3933 with a low now at 1.3836. We were actually looking at 1.3880, although the next price level on a 50% Fibonacci retracement would be at the 1.3760 range, where it would be meeting some support and a corrective move on a daily basis before it continues to move lower. This is a rising Fibonacci fan formation that we're using to be able to draw support prices and lines that would be more identifiable when prices are moving. Momentum here has gone lower, and so has the Williams percentage rate. Comparing it now with the euro pound here, you could see that it already was an engulfing bar, a piercing formation, negative sentiments that caused the prices to continue lower. Of course, not to mention the crisis as far as Greece and Italy, which were the main fuel to trigger this down movement, causing the euro to move lower, influencing the euro pound cross rates to do the same. Our short positions, however, are still there, where it's already making substantial gains. However, since the trend and the price reversal has been established, which we have called since June 15th on our market view report, prices would continue to move lower. However, as far as the euro pound is concerned, the 21-week moving average at 0.8784 has been penetrated and meeting the support channel at 0.8755. As you could see that it had retrieved higher now, working at 0.8810, and especially so that opening trading sessions for the US market would cause a retrieval for the prices. Now, with that said too, looking at the pound here, and it's working at the price level of 1.5805, we were looking at 1.5880, and extensions below that price have already penetrated the 50% Fibonacci rising formation and moving lower. Also, that the report from the CPI in UK were not as good, although some have expected much better, but the continuation for the pound to move lower is there, and since it is moving lower, that is also the reason why the euro pound gained a little corrective move back, working at 0.8811. However, momentum for the pound has also made lower, negative sentiments on the percentage, so as the euro cross rate, euro pound cross rate rather, it has still more room to go lower. But however, there is no such thing as a straight up or a straight down. In spite of our long-term position on the dollar Swissy, here that you could see, we have established the euro pound on the 4th of July and on the 5th of July as well, shorting the euro with simultaneously with the euro pound cross rate at 0.9014 and at 1.4467. Obviously, these two positions offsets whatever long-term position or floating losses that we have on the dollar Swissy. With that said, since it's a live market, we're looking at the cable at 1.5805. Since this is on a weekly basis, we'll shift it to a daily, so you would be able to see that these prices are way below the 21-day moving average at 1.6063, which happens to be now its resistance. Second resistance, first resistance line would be at 1.5901. However, any tractions for the cable to move on a corrective move up would be an equivalent to a correction for the dollar index to move lower on a day-to-day basis. However, the trend for the cable as well as the euro has been established. Looking at it on a daily basis for the euro as well, that particular hammer with a tail at 1.4494 and a high at 1.4567 already showed that there was a particular and probable price reversal in the making, which it did on the 5th, where we have taken that particular position, shorting the euro at those price levels at 144 level. That is also similar to the daily of the euro pound cross rate, where here establish a low on the tail down, which we call, or a week, at 0.9003 from a high of 0.9059, taking that short has a short, or rather has a smaller risk tolerance level, where the risk here and the tolerance level are quite minimal, shorting at the price levels here the day after that particular signal has been confirmed. This was a corrective move for the dollar and a subsequent long price down for the euro the day after. As you could see here, touching that particular support level, it has retrieved towards the opening of New York. We'll be maintaining our position so far for the week, midweek as well, and see how the prices would behave, although it is now a confirmation of its directional trend lower. So we will be having this monitoring of prices on a day-to-day basis towards the end of the week. We do hope that this would be helpful to your trades, and good luck and have a good trading week.